Okay, so now I want to talk about how to identify price targets if you're playing reversals off of the 0.618 level, or if you're even using the 0.707 level as an entry in the first place. And that is going to be with the 1.414 and 1.618 levels that we mentioned earlier. If I go ahead and take a look at this example again here, you'll notice that we get that reversal occurring off of the 0.618 level. We actually do get a bit of a head and shoulders pattern at this level. And if you were to decide to either take an entry at the 0.618 level or the 0.382 level, you could set your stop loss at the 0.707 level. Now, how can we identify and know where price is likely to move when it breaks and creates these new lows down here? We can use the fib retracement tool to use the 1.414 and 1.618 levels as price targets. So if I go ahead and take a look at this move right here, now tracking this retracement, if you were to go ahead and take an entry right here, basically what you're doing is taking a retracement of the move that led into the level. And look how great these price targets are down here. You have your first price target at the 1.414, which is actually where we found support. And the 1.414 essentially is just the square root of 2, which is double the 0.707 level. And it makes for a fantastic price target as there is a strong level of support here. Now, where you would leave runners to if you were to continue holding on to the position is sell at the 1.618 level. So you have a price target at the 1.414 level, and then you have a second price target at the 1.618 level. Both of these work together quite well to allow for price targets, and all you had to do was basically just take a retracement of the recent move that led into the 0.618 level. Also, notice if you were to go ahead and take an entry with the breakthrough of the 0.707 level, instead of just playing to the 1 level, you can have further price targets at the 1.4 and at the 1.414 and at the 1.618 level. So this provides target opportunities for if you're entering at the 0.618 level during a retracement, or if you're playing a continuation through the 0.707 level. And look how strong these risk to reward ratios are. If I were to go here and track a short position, if you were to go ahead and take an entry at the 0.618, setting the stop loss with a nice little buffer at the 0.707 level, and playing this to the 1.414 level, you get a risk to reward ratio of 8.66, which means for every dollar that you are risking, you are standing to gain 8.66. And if you were to play this to the 1.618 level, you would get a risk to reward ratio of nearly 10, which is incredible. And pretty much that means that you only have to be correct about your conviction around 10% of the time just to break even in the long run. Anything higher than that is going to give you fantastic gains, but it is not guaranteed that it is going to go to the 1.618 level, which is why we have the 0.382 level as a price target, the one that we mentioned for the reactionary bounce, the full zero level as a price target, which is just a retracement back down to the low. And then you have the 1.414 of the recent move and the 1.618 level. Looking back at this example here, where we were talking about if you were to take an entry at the 0.618, stop loss with the candlestick closed below the 0.707 level, you could find future price targets by taking a retracement of the move that led into the 0.618 level. So if I go ahead and do that here, notice going from relative high this time to relative low. You can either play with the entry with the break of the 0.707 level, but if you enter down here, look what we have here. You have the first resistance pretty much found at the 1.414 level, which would of course be a price target, and same thing for the 1.618 level. It acts as another price target before we of course find some resistance, and when this level was eventually broken through, you could do the same tactic to find some more price targets back to the upside by of course using the retracement of this move right here. And notice once again, 1.414 and 1.618 acts as very strong levels of resistance over here, turned into a support on the 1.414 level before seeing a further continuation upward. And if you just look at where this move right here went to, you'll notice that if I just take a retracement of this move, it first finds resistance at the 1.414 before then moving to the 1.618 level. So the 1.414 and 1.618 level act as very strong price targets for when you're playing retracements, and all you have to do is just reverse your Fibonacci retracement tool and go from the high or low and then into the 0.618 level. Let's take a look at another one of these real quick before we go ahead and wrap up this video. If I go ahead and look at this same example that we looked at in a previous video, going from relative high to relative low, and if you were to, of course, wait for the candlestick close above the 0.707 level, your first price target would be at the 1 level, and then, of course, look at the 1.414 level. We see a nice strong move after we get that close above the 1 level that moves then into the 1.414. Here in this situation, we did not see a move to the 1.618 level, which is why I'm saying that you can use both of them as price targets, and the 1.618 level is not a sure thing. But for the future, if you are leaving runners, these two levels act as great levels for you to take profit at. So what you guys can get out of this video is that the 1.414 and 1.618 are further price targets that you can use. Anyway, that will do it for this section on Fibonacci retracement tool. Very strong tool, and we went through all the levels. 0.382 and 0.618 level offer as very strong levels of resistance that you can play between. The 0.707 level acts as a pivotal point where if it breaks above it, it's very likely to see a continuation upward. And the 1.414 and 1.618 level are, of course, going to be price targets. And that also does leave the 1 level as a price target if you are entering at the 0.707 level. But anyway, guys, thank you and stay tuned for more.